Hi, Mark.
Hi, Jenson.
There's so much press on investing in gold and silver right now and opportunities going forward. Why is this portrayed as a good investment at the moment?
Good question. These commodities have certainly had a lot of attention of late, particularly in times of inflation and economic uncertainty. Precious metals gain momentum. Despite the price continuing to rise, we believe that there are a few good reasons to including these as part of a well-diversified portfolio. A couple of reasons are they can be a hedge against inflation. Basically, these commodities continue to rise or retain their value when currencies lose their purchasing power. The limited supply of these commodities makes them resilient during times of inflation. And secondly, they have a low correlation with other assets. In short, these commodities move independently of stock and bond markets, and depending on your portfolio, can help smooth potential volatility and may reduce risk.
So, should all investors have an allocation to gold and silver in their portfolios?
No, gold and silver are not investments for everybody, Jensen. However, depending on your risk profile, there may be some benefits of having some exposure to this investment class. Again, it's very much dependent on your needs and objectives of your financial future, your tolerance to risk, and most importantly, your time horizon. You need to speak to your financial advisor to ascertain if this investment is right for you and how it fits in with your overall portfolio.
Well, in what scenarios would an investor not have an exposure in this asset class?
As there are many reasons to consider this investment, there are also many reasons not to have this as part of your strategy. And this includes, but it's not limited to, liquidity. If you're needing access to cash and you require funds to be liquid, then price fluctuations may make this asset harder to sell. If you are seeking income, as this is a physical investment, the commodity is solely focused on growth and does not generate income. Or if you're a conservative investor, like stocks and bonds, the prices do move around at times, and this may not be in your favour. At Acorn Wealth, we recognise this as an alternative investment, and discussion around your tolerance to risk would be had prior to any investments being placed.
So, how can an investor gain access to having a gold or silver exposure?
Well, gents, we'd recommend that you speak with your Acorn Wealth advisor, who will be able to provide options for you, including exchange-traded funds or direct shares that have exposure to these asset classes. And fortunately, you can access these assets through both super and non-superannuation investments. But again, a conversation with your financial advisor will help determine if this investment is right for you.
Thanks, Mark, for those insights. If you have any questions regarding gold or silver exposure, your Acorn Wealth advisor is there to assist you. As Mark has stated, it's important that you meet with your advisor to determine if this investment class is suitable for you. At Acorn Wealth, we have a strict due diligence process around the investments we are allowed to recommend. This is conducted independently by our licensee. We must strictly follow this approved product list, or our APL, which is reviewed constantly, which fortunately does allow for gold and silver allocations. We are not permitted to invest into funds outside of this list, and all our advice must be backed with research. Once again, if you have any questions or concerns, please feel free to reach out to an advisor at 1300 455 170 or via their email, which can all be found on our website www.acornwealth.com.au. Thank you.